Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. And markets have had a bit of a correction, and that European correction that I was telling you about certainly unfolded quite successfully for us, with markets beginning to price in some not so great circumstances for the French, German, European condition at the moment, despite all of the previous euphoria about strong recovery. We know central banks are going to continue to raise interest rates around the Western economic world, but in the US we did see some data out yesterday which points to ongoing high recessionary risk or manifestation, and we saw that in the used car prices data, which used car prices continue to plummet, and that's really often a very strong indicator of very tough economic times ahead. We also saw inventories very flat, and they've been non-luster for a very long time now. Of course, the market liked the fact that inflation expectations in the US again dropped. It was a good drop. It wasn't a huge drop from 4.1 to 3.8. And as long as gasoline prices remain subdued in the United States, that's definitely good news. And the headline inflation number is often led or indicated to by that expectations number. So we should be expecting some further softness at last, again, I should say, in that headline inflation number. But of course, it all comes back to core inflation these days. And I can't underline enough that the Federal Reserve will be wanting that number to come down. It will be encouraged, certainly, but not enough to go on hold if the core inflation number continues to remain as high as it is. And when you look at the charts of headline inflation or the expectations number we saw yesterday out of the US, and you compare that to the core inflation chart, they are two very different stories. One has this big pullback, the headline and the expectations have big substantive pullbacks from those elevated levels, still not to levels that make the Fed comfortable, but trending in the right direction at least. While core inflation is not trending at all. It's staying stubbornly high near the previous peaks. And that is why the Fed is concerned, and that's what could well lead to another interest rate hike from the Federal Reserve at its very next meeting. Of course, we're going to get further inflationary data out soon, and that too will tell a story, but watch that core inflation. That's really the number to be well aware of, and we should see some downside in that, but will it be enough to put the Fed on pause? I think probably not, but let's see what happens in that data stream. In terms of markets, I do think gold and oil are building bases here to go higher. I do think the US dollar could be entering a fresh phase of trouble, so that might be of interest. And I do think that overall in the geopolitical or the global macroeconomic sense, that the Asian economic zone is going to hold up better and stronger than either the US or Europe, and it's certainly been doing so to date. But I think it's going to become a little bit more marked, and we're going to see Asia begin to break away from the doldrums of the United States and Europe to the upside. Now, China isn't outperforming, but it's still performing very strongly. And we're seeing across Asia today some strength in Asian equities, and I tend to continue to favor Asian equities over Western markets, so do keep an eye on that. For the Australian dollar, it could be a slightly different story. I still see troubles ahead for a global slowing, and therefore people becoming a little bit less enthusiastic about the Australian dollar than perhaps they have been previously. So whilst I might want to buy some other Asian currencies and perhaps the Australian dollar, I'm not so certain on that Australian dollar call. For equities in general, they're going to have a bit of a bounce around consolidation, a little bit of upside here on the back of that inflation's expectations number out of the US yesterday, which again dropped from 4.1 to 3.8 over the previous year. So that is to be expected, but we know there are other resurgent inflationary pressures in the US economy from wages and services that will continue to keep that core price well elevated and continuing to head higher. So just be very wary of that. Thanks very much. I hope you have a great day. Clifford Bennett, Chief Economist, ACY Securities.